Hi everyone, and welcome to what I hope will be my third and final installment of the series, Where to Invest $10,000 or More for Canadians. To be honest, I really struggled with this video. My past 3 videos on ETFs were pretty much all the information you need. Anyone with $10,000 or more could mix and match any ETF I previously recommended. I had no idea what to recommend. I didn't want to repeat myself over and over and release the same videos 3 or 4 times because that's lame. So I decided to take more risk with this one. When you have $10,000 or more, you have more money, more opportunities. So let's take a little more risk. For anyone watching with over $10,000, if this video doesn't suffice or meet your needs, you can go watch the previous 3 videos and mix and match any ETF at the percentage you want. I give you enough information for you to make an informed decision. I chose all these ETFs to withstand the test of time, so no matter when you're watching this video, just as long as you're in it for the long term, it doesn't matter when you're watching this video, you can choose those ETFs to buy and hold forever, pretty much. Okay, so get ready for a lot of repetition and overlap, but I'll walk through my thought process for each one. I'm recommending 60% or $6,000 in VEQT. So yes, you heard that correctly. The majority of your investment, the majority of your portfolio in one ETF, but for good reason. VEQT is Vanguard's all equity ETF. It's all stocks, no bonds. This ETF pretty much invests in the whole world, so you'll be indirectly owning 13,000 different stocks. The management expense ratio is 0.25%, so $2.5 for every $1,000 invested. But keep in mind, you don't pay these directly. They're taken out of the ETF's returns. So your returns will be slightly affected, but that's fine. They pay an annual dividend, so you only get paid once a year, and the yield is around 1.4%, but I know I've said this a lot in the past, you're not holding this for the dividend, you're holding for the capital appreciation. It's hard to judge the performance of this ETF since it's only been around for 2 years, but I can still show you the performance since its inception, which is 14%. The only way to know if this is good or bad is if we compare to the market, which is VSP. The returns for the S&P 500 for the last 3 years have been 14.65%, so we're underperforming but only slightly. If we take a look at what this ETF invests in, it's like Inception. This ETF invests in other Vanguard ETFs. If you notice, I've recommended these in the past. You'll be 40% invested in the US, 30% in Canada, 20% in all developed countries excluding North America, and finally 8% invested in emerging markets. If you recall my previous videos, I'm recommending at least 40% in VSP or the S&P 500. That's covered in the first ETF, the US Total Market Index. I'm also bullish on the Canadian economy. That's covered in the second ETF. If you want international exposure because we're too biased in the US and Canada, that's the third ETF. It includes the UK, Japan, and Australia. Then lastly, emerging markets exposes you to China and India. In my mind, these will be major players in the future. Taking a look at the industries you'll be invested in, it's a great mix. Surprisingly, it's not mainly tech, but obviously financials, tech, and consumer discretionary will be the bulk of your investment, which I think is perfect. I recommend investing in your TFSA first, and once that is maxed, move on to your RRSP or RESP or any other tax sheltered or tax deferred accounts. If you invest with Questrade or Wealthsimple, there are no commissions for ETFs, so you'll be able to add monthly to your portfolio if you want. If you invest with banks, I don't know of any banks that waive the commission for ETFs. So if you do want to invest monthly, they will charge you $5 or $10, which will eat away at your returns over time. I do recommend Wealthsimple or Questrade. Next on the list, I'm recommending to invest 30% or $3,000 in VEE, Vanguard's Emerging Markets ETF. I know what you're thinking, we just saw this. I just recommended VEQT, which indirectly has you investing in VEE. The reason I'm recommending this ETF separately is VEQT only has an 8% exposure to the emerging markets. I want a bigger exposure for my future returns. I want bigger exposure to China and India. Given their growing size, their growing middle class, and how the industry is playing out with raw materials in the growing tech sector, they will be major players in the future and I want to be part of it. The management expense ratio is 0.24%, so similar to the previous ETF. They do pay a quarterly dividend, which is only around 0.7% per year. I know I say this a lot, dividends are super cute, but you're investing in this for capital appreciation. If we take a look at the market allocation, this ETF is 41% China, 17% Taiwan, and 12% India, which is great exposure in my mind. If we take a look at the companies representing those countries, Taiwan Semiconductor Manufacturing, Tencent, and Alibaba make up the top 3. Looking at the historical returns, you won't be too impressed. 7.35% annual return since inception. It sounds good, but when you consider the market has generally returned 9% annually, this ETF has underperformed the market. I'm not too concerned since I'm almost positive these returns will turn around and end up beating the market in the future. Hold this ETF in your tax-free savings account, RSP, RESP, or any other tax-sheltered or tax-deferred accounts. Second last on the list, I'm recommending to invest 5% or $500 in ARK, ARKK, if you have US dollars, or EARK if you have Canadian dollars, which is Emerge ARK Global Disruption Innovation ETF, which is a mouthful. Emerge is a Canadian investment firm, which is basically creating the same ETFs that are managed by Cathie Wood's, her ARK Innovation ETFs. They have the exact same holdings, just in Canadian dollars. Cathie Wood's was able to get over 100% returns on her ETFs in 2020, which is a bit of an outlier year, but going forward, her aim is 15 to 20% per year. She's focused on investing in companies creating disruptive technologies. Since this is very actively managed, new positions being sold or added every day, the management fee is pretty high actually at 0.8%, and the management expense ratio is 1.15%. They're actively looking to lower this over time. If we look at the ETF's top 10 holdings, you'll see a few familiar names. Tesla takes the top spot, then Square, Teladoc, Roku, Zoom, Spotify. These are just some of the companies. These percentages change daily. Let's take a look at the returns. This fund has only been around for 2 years or so, but we'll use the 2 to 3 years of VSP as a comparative. Since inception, 2 years, the ETF has returned 58%, which is insane, considering the market has only gone up 14% using the closest comparative period. This isn't for the faint of heart though. There's a lot of volatility in the short term. Take a look at the negative returns in the 1 month and 3 month periods. But overall, this should provide great return for your portfolio in the long term. Making matters worse, tech has taken a huge hit recently. ARK went from 155 to 100, but this shouldn't scare you. This should excite you because you're buying at a discount. If you're searching for this ETF, it's EARK.TO. If you see it listed as .NE, that's the NEO exchange. That is the same thing. If you find EARK.U, that is in US dollars, I don't recommend investing in that. If you have US dollars, just invest in ARKK, ARKK, which is the same thing in US dollars, but a lower management fee. Last on the list, and probably most controversial, I'm recommending to invest in a Bitcoin ETF. I'm recommending investing 5% or $500 in BTCC.B.TO. This is Canada's first Bitcoin ETF, and there's also BTCC.U.TO if you want to invest in US dollars. I spent an entire video breaking this down. I'll leave a link for you to watch instead of repeating myself for all 7 or 8 minutes. But long story short, this only invests in Bitcoin, not all crypto. So you'll get to experience the fluctuations, the ups or downs of the Bitcoin cryptocurrency itself. I'm perfectly comfortable recommending cryptocurrency as part of your investment. I think crypto will be part of our future whether we like it or not. So I am very comfortable in saying at least 5% of your portfolio, no matter the size, as long as it's $10,000 or above, I recommend at least 5% be invested in cryptocurrency. And that brings us to 100%. I received a lot of criticism on my last video saying it was too complicated for beginners, which I guess I agree. You can ideally invest in VEQT. You can go 100% in VEQT if you want, but that's boring. That's not much of a video. So I did reduce this one from 5 ETFs compared to the previous ones to 4 ETFs, which hopefully is a little simpler. If you don't want any cryptocurrency investment, you can go 10% ARK and skip the crypto if you'd like. If you have $10,000, you can invest in these ETFs, but what would you do with the extra money that you earn every year or every month? Invest monthly. The best thing you could do is dollar cost averaging. You take advantage of the increase of the market if it goes up, or if it goes down, you'll slowly be dollar cost averaging down if you'd like. So I do recommend don't just invest all at once. Don't save up $10,000 once a year. If you're able to save up 500 or 1,000 every month, invest monthly, you'll be happy you did. Thanks for watching. Leave any recommendations you have for other videos. I'll be reading the comments and hopefully producing more content. I'll probably be doing more beginner beginner stock videos. I'll probably be slowing down on the options videos since I've done a lot recently. So leave any recommendations you have, any questions, and hopefully I can answer them or make a video on it if there's enough interest. Thanks for watching. Tune into the next one.